You are clear to close. Those are the three words that we are looking to hear in the loan world. That means that your loan is good to go, you're clear to close, you're going to buy that house and move in. Now, let's not get too far ahead of ourselves. Let's talk about the loan process, how it works, and we're going to go from start to finish. I am specifically going to highlight the VA loan. However, all loans, aside from some of the specific things for VA, follow the same process. So this will apply to FHA, conventional, USDA, and VA. So again, my name is Drew Smith. I am a licensed loan officer at Military Home Spot Lending, NMLS number 2113580. You can go to the NMLS website. You can search that number and you can find me, see that I am active and a loan officer. So coming from my perspective, I want to go into a deep dive of what the process is. And I want to let you know as a potential buyer or borrower what you are going to be required to do, what the process is like, and really help you along that way. If you've got any questions throughout this, please put them in the comments. I will answer them individually as they come up. But let's go ahead and start with the process. So before you start talking to realtors or real estate agents and looking at homes, you really want to take a step back and get approved with a lender first, because you want to know what you can qualify for, how much, and if you even qualify at all. There could be something that you don't know about that could disqualify you from being approved for a loan. So it's good to know that up front so that you're not out there looking at homes only to be disappointed when you find out you don't actually qualify. So the first thing is talk to a loan officer and fill out an application. So the application, we call it the 1003. It basically just wants your information. So you put in your personal information, all that kind of stuff, everything that will allow us to run a credit report or get a credit report on you. Plus you're going to put in the last 2 years of your rental history and your work history. Another thing to note on that 1003 for veterans is that you are going to need your COE. This is your certificate of eligibility. It is the document that you will get from the government, from the VA, that tells us that you are indeed entitled to your VA loan. There are some things with entitlement. You've got two types. You've got Tier 1 and Tier 2. Tier 1 means that some of your entitlement has been used. Tier 1 means that none of your entitlement has been used. Tier 2 means that some of your entitlement has been used, either on a purchase that you currently have, or possibly you owned a home, it was foreclosed upon, and then you lost some of your entitlement. So we'll get your COE. It's easy to get that. You can go to the VA benefits website and pull it yourself. You can call me or other lenders and we can actually pull it once we have the application and some of your information. I can go ahead and request a copy of it for you. I get it almost instantly if you are in the system and it is easily available. However, if there are some issues with it, such as they just haven't researched everything and issued it yet, we can help you on your behalf. So I would just need some of your documents. So it depends on how you served, when you served. We would go through the process. Whatever they ask for, I would submit. Sometimes it's DD Form 214, separation papers, depending if you are a reservist or active duty. Whatever they ask for, we can go ahead and fill out the questionnaire, submit that stuff, and we usually get it back within a couple of weeks. Then we can verify that you are entitled and eligible for the VA loan. Then other loan programs, FHA, conventional, it's all the same stuff. You just don't have to have the COE. Now, the nice thing about your VA loan that's different than the other ones is that there's no down payment requirement. You served, you fought for the country, you made a huge commitment, and you are being benefited by not having to have a down payment with your entitlement for a VA loan. So I think that's really cool. USDA also has an option for no down payment, but there are restrictions on where you can buy that house and what type of property it can be and stuff like that, things that the VA loan doesn't have. So you filled out the application, you put in all your rental history and work history. Now we're going to need 2 years worth of rental history. If you are living rent-free with a family member or something like that, we can go ahead and use that. So that's okay. That might not necessarily disqualify you if you don't have 2 full years of rental history. But in some cases, if we're doing a manual underwrite, there are requirements for 12 to 24 months of a verification of rent showing that you have paid your rent on time for the last 12 to 24 months. So that could come up. However, we don't have to worry about it right now, but just know that that could be an issue. Then you've got work history. We want 2 years worth of work history. One of the biggest things with a loan is how are you going to pay it back? So we need to have 2 complete years worth of work history. Now, the VA handbook does have some circumstance where you can get away with 12 months or less of work history. However, you need to have some other compensating factors to back that up, such as schooling. So let's say, you went to school, you got a degree as a CPA or in accounting, and now you're working for an accounting firm, but you don't have 2 full years. Maybe you've only been at that firm for 6 months, but you went to school for 4 years to get your degree, so we can go ahead and make up the work history, with some of your schooling. So that's a little bit about work history. Don't worry too much if you don't have that complete work history, but it could be an issue. But any type of training or education, we can show that you're well qualified for a position, that you have more behind your work history than just signing up for a job. Now, there's 2 ways that people get paid. You've got W-2 or self-employed. Really, when you boil it down to basics, those are the 2 ways that people get paid. If you are self-employed, it's really hard and fast with the 2 years. You have to have owned your business and filed taxes for it for the last 2 years for us to use it as income. Same goes for if you have a full-time job and you own a business as well. No matter what, if it's a self-employed business, 2 years worth of tax returns filed for that job. W-2, at least a year on the job, previous experience or training can be considered in that situation. So now we're moving on to credit. Now, another really good thing about the VA loan is that there is no minimum credit score requirement. What does that mean? That means when we pull your credit, so we still have to pull credit. That doesn't mean that there's no credit requirements. There's no credit score requirement. When we pull that, we get your report back, Equifax, Experian, TransUnion, whatever numbers those come back at are irrelevant to whether you qualify or not. Those numbers do not matter. Now, not all lenders will do manual underwrites. So for us, we can do that, but some other lenders don't do that. They have an overlay where they require a specific credit score. 620, 640 is usually the average. We don't have that minimum credit score requirement, so we can go below that. But the VA does have a 12-month rule. So in the last 12 months, there can't be any late payments, charge-offs, or collections. When it comes to charge-offs or collections, they just can't be dated or originated in the last 12 months. Same goes for late payments. Now, you can have some old collections or charge-offs outside of the 12 months. If you had something go to collections when you were younger, maybe a little bit irresponsible or reckless, whatever the case may be, if it's old, outside of the 12 months, we can still move forward. Also, any judgments. If you have any active judgments, those could be an issue. Sometimes we can just resolve them and pay them at closing and get those out of the way. The next thing, once we've passed the credit, if you qualify, there's no issues there. Sometimes we do run into some issues. If you have some late payments within the last 12 months, that means that we have to wait until 12 months has passed. So if you had a late in September of 2022, that means you have to wait until September of 2023. So it's 12 months from the last late payment, collection, or charge-off date. The next thing that we're going to have to figure out is closing costs. So you can do 100% financing on a VA loan. When you're looking at other loans like FHA or conventional, you have to have a down payment, but you don't need that with VA or USDA, but we're looking at VA here. But that doesn't mean that there aren't closing costs. So what are closing costs? So these are going to be things outside of that down payment requirement. It's going to be things for the loan. Some of it's lender fees, some of it's third-party fees, some of it's cost to get your current market interest rate, and some of it's actually the borrower's benefit or for the borrower. So you know when you have a house, you want to protect it, you're going to have homeowners insurance. Most states that you live in, you're going to have to pay property taxes. So those are added up. You have to fund an escrow account. Your homeowner's insurance policy has to be paid up front for a full calendar year, plus you need 2 months of reserves. That means you have to have 14 months worth of homeowner's insurance. That adds up pretty quickly when you are looking at your closing costs. Then you have property taxes. Depending on the state that you are looking to purchase in, property taxes are due at different times throughout the year. So you may need to have 2, 3, 5, 6, 10 months worth of property taxes. Just depends on where and when you're doing this transaction or this purchase. Then you've also got title work. You'll have an appraisal. You'll have any type of homeowner's inspection. When you're purchasing a home, it's always recommended, it's not required actually from the lender to do a home inspection. Real estate agents always recommend it. I always recommend it. That's where you hire a professional. After you're under contract, they'll go in, they'll look over the home. Any issues that they find, they will present to you in a report. And then you can do what's called your inspection objection, where you take that report, you go to the seller of the home and you say, hey, we found these issues with the home. Would you be willing to fix them or reduce the price or something to help us, figure this out? It's a negotiation. Another thing that you're going to have is what's called earnest money. Now, this isn't a down payment necessarily, but you can think of this as promissory money. You are giving this money to the seller of the home, stating that you are indeed serious about the home and you want to purchase it, right? This could be a huge transaction. In most cases, it's going to be the biggest money transaction that people make, and there's a lot going on there. So to show to the seller that you're serious, they want earnest money. Now, you don't give it to them directly, you give it to the title company that holds it. It's typically 1% of the purchase price. It varies, and again, it's all a negotiation. Really, when it comes down to it, whatever your position may be, you may only have X amount of money for your earnest money, and you can always offer that, but typically it's 1% of the purchase price. So you're going to have that upfront out of pocket. It has to be verified funds, depending on the title company. Sometimes it can be a personal check, but typically they're going to want wire transfer or some type of cashier's check. The other thing, so that's your closing costs, right? So these all add up. You're going to get your sum. You've got also included in your closing costs any current cost for your market interest rate. You can think of interest rates kind of like the stock market, right? They vary, they change throughout the day, multiple times a day, on a weekly basis. They can change whenever, intraday even, multiple times throughout the day. It just depends on the market. Depending on your circumstance, credit score is one of the big factors of that. There can be a cost to your interest rate, which is represented as a discount point. And that has to be paid up front in your closing costs as well. So add all that up, you get your lump sum. This is your closing costs. Also, if you're doing another program, any of your down payment requirement would be wrapped up in that as well. And this is going to be your total amount. Now, what we need to figure out is how that is going to get paid. And I like to do this before I issue any type of pre-approval, because we need to know if we can actually get this thing done if somebody accepts our offer. So there's a couple different ways that you can pay for that. Of course, any money that you have within checkings or savings. When you start looking at other money like cash, we call it mattress money. You've got all this money just laying around, it's coming out of the ceiling. You got all these piggy banks. You just got this abundance of cash, right? It's really hard to use that in a purchase, in a mortgage transaction, because of the Patriot Act and other rules and regulations. All of this stuff is being tracked, and it's all going to protect and prevent fraud and terrorism. So we have to show where this money is coming from. So if you have a large amount of cash that you want to use for a purchase on a home, put it in your bank account, put it in your savings or checkings account, let it sit there for a couple of months, because we're going to need at least the last 2 months worth of bank statements. And if the money's already been in there and we don't see it deposited, we don't have to source it after 2 months. So get any kind of cash that you have on hand that you want to use into your bank account as soon as possible so that we can use it. We can also use any other assets that you might have. My personal retirement account, I know that I can liquidate a portion of that to pay for a home or some of the closing costs in that. You'd have to check with your individual broker or account to see if that's something that you could do. But really think about all of your assets that you have and look into if they might be usable for that. You can also get a gift. You can have friends, family that can give you the money. Now they will have to state that it is a gift and that you're not going to be paying it back. You could get a small personal loan as well if you can afford it, and we can calculate it into your debt to income ratio. If you have enough room there, you can qualify for it. You could take out a small personal loan in order to pay some of those closing costs. Another thing that you can do is you can ask the seller of the home to pay for your closing costs in what's called seller credit or seller concession, depending on where you are in the country. We call it different things. Then you can also ask the lender. Now on these last two here, the seller and the lender, essentially what you are doing, you're asking somebody to take a haircut on the deal. You're asking the seller to take a lowered net profit on the home, or you're asking the lender to take less proceeds as well, or less profit from the sale of the home. But it's always good to ask, and depending on where you are and how much you have and how much you need, we can always ask for those. I mean, the answer is always no if you never ask, so always ask, and you can kind of see what you might be able to do there. So once we get all that figured out, right? So you filled out your application. Again, we call it the 1003. You have your COE. You are entitled. There's no issues there. Again, typically to get your entitlement, you can go to the va.gov website. Typically 90 days active duty, you are eligible for it. What I've been kind of told or see is after you've been assigned permanent party. But it's all different. It all varies. I've seen borrowers that were hurt in basically basic training, and they were discharged, medically discharged, and they got their COE. So it's really unique and dependent. So, you may have your COE outside of kind of the standard documents and ways that we know about it per the VA website. If you need help with that, we just submit it, try to get your COE, and they'll let us know if you're eligible and entitled or not. Then we pull your credit report. No issues with the credit. We're good to go there. We're getting thumbs up. We figured out the closing costs, combined, how you're going to do it with some of the money that you have on hand. Then we're also saying, hey, we're going to ask the seller to pay this portion of it, and I'm going to get a little bit from mom and dad here. So we figured out how we're going to pay your closing costs. That's when I would issue the pre-approval. So again, before I issue the pre-approval, what I would do is verify some of those things. So I'll need some documents. I'll go ahead and collect W-2s, bank statements, the last 30 days worth of pay stubs, and any other things that are relevant to the circumstance on which the pre-approval would be given. Once I collect and verify all of that stuff, I issue this letter that says you're pre-approved. It's got my information on it. It says that you're pre-approved for this amount. You then take that letter, you give it to a realtor, real estate agent, and you say, hey, I'm good to go. I'm ready to start shopping. So now you've got that letter in hand, you're pre-approved. You can go out, you can look around, do all that window shopping, all that fun stuff. This is kind of a very exciting point in the process where you actually start to envision what the future is going to look like, the homes that you can get, what price range you're in, and you start looking. Now, once you find a house that you really do like, then it's time to put in your offer. So at this point in the process, depending on whether or not you have all the appropriate money to pay for the closing costs, you just put in the offer. Or if we need to, we can go back and forth with the lender and the realtors, and we can talk about how we have the loan structured and what we need in closing costs from the seller to go ahead and get the deal done. We figure all that stuff out. We put our best offer forward, and then it's on the seller to accept that offer. Maybe they've got multiple offers. Maybe you're the only offer. It's up to them. And if they accept it, that's when we start moving forward. So for this case, we'll say, okay, they've accepted your offer. Awesome. So now that's when we really start hitting the ground running and start processing and underwriting the loan. So with that, the contract gets accepted. Everybody signs it. It's all good to go. Everybody's agreed on the terms. That purchase contract comes to me or the loan officer, and then we take that with everything else, we submit it through our processing team. Processing team scrubs everything, says it's all good based on how we've packaged it up. Then it gets sent over to the underwriters. Now in the processing phase, we could find that we need more documents depending on the circumstance or situation. Any documents that we need before processing, we'll grab those. We have everything that we need now. Let's go ahead and submit it to underwriting. At this point, the underwriter is going to look at it. If we have an approve eligible loan, then they write it to those guidelines. If we have a manual underwrite, then they have to compare it to the VA handbook itself. It all works. It's all the same process essentially. The underwriter is looking at everything that we've submitted as far as the borrower's documents compared to the underwriting standard, and they will check off whether it's good or not. Then what we will get back is called our conditional approval. So the underwriters looked at everything. They said, yeah, everything looks good. I just need some updated bank statements. I need to see that the earnest money actually went to the title company. That's another thing in the process as well. So after I get the purchase agreement, the borrower is going to take that earnest money that I talked about earlier, and they're going to take it down to the title company. And so they'll take, that's one of the requirements that they'll have to do. And then on the back end, while we're working on processing, the borrower is actually working on some other stuff with the home. They've got to do a home inspection if they want that done, so they'll have to get that scheduled. As the lender, I will have ordered an appraisal on the borrower's behalf. Now, we can pay for that, what's called a net 30, so we can roll that into the closing costs. Otherwise, the borrower will have to pay for that appraisal. So all of this stuff is kind of going on simultaneously, and we've got all these balls up in the air. But eventually, we'll catch them all. We'll catch all those items that we had up in the air, and we'll start moving on with the loan there. Everything has to come in before we can get the final approval for the loan, so we'll have to get the appraisal back. Now, the home does have to appraise for the amount that the contract is for, at least that or more. If we get an appraisal that is lower than the purchase price of the home that's on the contract, then we have to go back to the seller of the home and say, hey, we didn't get the appraised value. Will you drop the price of the home? So that could be something that could be an issue. Also, if during the process, the inspection that you have ordered, if something comes up with the home that is just detrimental, that you can't get past, maybe there's a huge crack in the foundation, something that you don't want to deal with, at that point, you can get out of the loan as well. So even though you put that earnest money in, you still can get it back throughout the process. There's different points throughout the loan process where you can get your earnest money back without any issues. Any home inspection that you've done or appraisal that you paid for, you can't recoup that money. That is basically a service that you paid for by a third party to come out and do that work. They did that work, so they still have to get paid for that, even if the loan doesn't close. So that's it. So once we get those final conditions back from underwriting, they just wanted a few bank statements that showed some things, maybe some updated pay stubs, maybe they wanted clarification on a gap in your work history. One thing that we'll do for your work history is we'll do what's called a VOI, a verification of employment or income. And there's this third-party system where we can request some documents there. So maybe we found out, oh, the work history wasn't exactly right. We might just need a letter of explanation for anything like that. But we get our conditions back from underwriting. We give them what they need. They look that over, and then they give us our CTC, our clear to close. And at that point, we can go ahead and set the closing date. Everybody meets at the title company that the realtors decided on, and the borrowers are there, the sellers are there, the real estate agents. I like to go to all of my closings if I'm available and in the area, and I'm there to answer any questions that you have and kind of just be there for moral support, but I don't have to be there. Really, the only two people that have to be there are three people, is the seller, the buyer, and then the escrow officer that is doing everything, or the notary public that is having everybody sign everything. So you get everything signed, then we get all those documents back as the lender, and then we send the money. We release the funds. The seller gets paid. The borrower then has a new mortgage, which we call a note. They take all of their documents, they get their keys, and they move into the new home. So really, that is kind of the boiled down version of the process, high level of every process or stage throughout the loan. If you got any more specific questions about that, please put them in the comments. Reach out to me again. I'm super easy to get a hold of, email, phone call, whatever. I'm happy to kind of guide you through the process and answer any specific questions that you might have. Every borrower is like a thumbprint, and by that I mean very unique. So these are the main things here, but there's some nuance within each one of them that are specific to you. So again, my name is Drew Smith. Please like and follow for more mortgage tips. I'll see you in the next one.